Hi, my name is Taylor Moffat of Hallidine, and I'm a partner managing director with a private investment banking firm. Our link is provided below. If you'd like to click and find out more information about us, we'd be happy to answer any questions or help you out in the future. This video was put together for our clients that are interested to know a little bit more information about dividends. Should I pay dividends or should I reinvest and grow the company? The way that you can analyze this and determine the answer, the way that we would do it typically is we're going to look at the price to earnings multiple of similar companies in the market to determine your cost of capital. If the price of your stock is forecasted to be 50 times earnings, because that's what all of the other similar companies are doing, that means you're getting a really high price when you sell your stock and your cost of capital is low. If your price to earnings multiple is forecasted to be 8, then your cost of capital is going to be a little higher because your price is not as strong. So your cost of capital is going to have a lot to do with whether or not you should reinvest. So then from that point, it's just a simple comparison. We just convert the numbers so that everything is comparing apples to apples from a straight return on investment perspective. So if your cost of capital is, let's just say, if you're trading at a price to earnings multiple of 100, your cost of capital is basically 1% return on investment. And if you're able to turn around and reinvest, and you can invest in, let's just say, a wind turbine, and you're going to get a 7% return on investment is your cost, your net return. 7% is 700 times better than 1%. So we would say, yes, you should not pay a dividend. You should reinvest that capital into the company and grow the company because your cost of capital is cheap. So I'm not sure if that was too fast, but feel free to give me a call, and somebody at our firm would be able to answer your questions and provide an analysis custom tailored to your company about whether you should take that cash and reinvest it in the company or pay a dividend. Bottom line is on that, if you're going to put the cash into the company and it's going to provide a bigger bang for the buck and make your shareholders more money by reinvesting it, you want to reinvest it. If it's going to just not make them a whole lot more money but could potentially dilute your stock by continuing to reinvest, well, I shouldn't say dilute the stock, but if the underlying share value from a per share perspective is not going to be improving by investing the additional cash into the company, and the shareholders are going to have a stronger return on investment by just receiving the cash because the price of the stock is that low, they may rather have the cash. That's what I was trying to say. So sorry about the dilution. Forget about dilution. You didn't hear dilution. Anyways, feel free to give us a call anytime, and we'd be happy to answer questions. Have a good one.